And we're back. Wednesday, June 5th. What is it? Is it June 5th? 4th. All day, Paul. What's going on?
How are you, my friend?
Pretty good. You saved me about 30 minutes ago.
Yeah.
Because I don't have TJ's phone number. I don't have any of the guys here's phone number either. I don't think I have Tom Sosnoff's phone number, and I wouldn't have texted him anyways.
Wouldn't suggest that.
Hey, Tom, founder of the company, can you come down and get me in the rain? Because I left my key card upstairs. But thank you for saving me this morning. It's rainy. It's dreary. You're the best, man.
Thanks, man.
What's going on?
I mean, yesterday was kind of a tease, right? It was about 85, and then today we're 65 and rainy.
We're still in the, I guess it's still technically spring, right? Like
technically, yes.
Although June feels like summer, June, July, August always feels like those are going to be the summer months, but it's later than we expect. And yeah, we got 85 yesterday. It was balmy.
Yeah, it was steamy.
I took the dog for a walk, and it was I was sweating more than I had hoped. Mm-hmm. But now, yeah, I would have taken it over. Now it's like that awkward, like it's 75. It's hot, but it's raining. Very strange, but you know, we take the good with the bad. What's been going on in Forex land? A lot going on for us. This is your first time coming on the show post integration. Mm-hmm. What have you been seeing with the TastyFX Tasty Trade stuff?
I mean, it's really like we found a really nice way to integrate our web platform into Tasty Trade. It's really all the same components, and that's what I love about it, because it's the same for me. It's not a whole lot of different. Obviously, for a lot of the Tasty Trade clients, it's going to be something new, but it's pretty easy to use. I think I showed you the little, if you click on the ask or bid button yesterday, it jumps you right into the chart, which personally I love.
We are finding little, of course, when you do stuff like this,
yeah,
the first reaction almost always is like, especially when you're dealing with traders, is like, well, here's what you did wrong. Yeah. And it's like, and so we got like a good amount of feedback of like, well, that thing, and especially when you're dealing with the likes of industry giants like Tom and Scott and JJ and these mm-hmm. people, it's like, it's not only like, oh, like that could be better or this, it's like, that's the dumbest thing I've ever seen, and no one will ever use that. And so we went through a lot of those trials to get where we are today, which is, I believe Tom on the show yesterday said that this is a real sleek platform. And that's as good as it's going to get from that guy. Not one to pat you on the back. But we are starting to find little things that the developers did super well, but maybe we just missed or failed to mention, which is now you can look at the watch list via the main watch list tab here, and you can click on these different markets, and it changes, you know, the market that is presenting at top, and then you go to trade, and you can, you know, you've got the chart and you've got all the trading functionality. Great. Also, you can be in the watch list, and I believe this is the main place that the platform takes you when you enter. You could pop out the side watch list here, and you can, and my screen is super zoomed in for the show, so it looks kind of funky, so don't worry about that so much, because you'll be able to see both the bid and the offer. And you can be here with any other tab and bounce around that way. Might be easier so that you don't have to keep going back and forth between the watch list, change it to a different market, and then click trade. And it's an extra click. It doesn't seem like a lot, but the stuff's fast, and people mm-hmm. want to be moving fast. And you pointed out yesterday that if you're here at the watch list, you're looking at, you know, net changes, swap bid and offers. Maybe you're saying to yourself, oh man, the dollar Swiss franc, it's not down a lot, but it's down a little bit. And, you know, the overnight funding for tonight is a little bit juiced because the weekend funding. Mm-hmm. So you're getting 3.5 points. Oh, I want to look at this right now. Bang, I can click on the bid or offer, and it brings me straight there.
Yeah.
So you lose a click, one click of efficiency there.
Yeah. And we love efficiency, don't we?
Well, there's also another thing that I think has started to interest people a little bit is just like TastyFX provides Forex, right? Like it's the single product, it's the main service that they provide, and with that, you're going to have a pretty clean and direct experience. Like there's only so many things to click on. I mean, there's 80 plus markets, but like when you're in the trade tab here, you're really talking about just different ways that you can trade this pair, as opposed to when you have a bunch of derivatives, options, futures, everything else. There's a lot of different, especially with options. It's like, is it one leg? Is it two legs? What are the, different parameters for you entering into this position? Here's all the Greeks, everything else. I think people have liked the clean look of not only this, but something that you were a big part of, which is, and of course, don't forget to read the disclaimer if you are going into the quick submit part of the trading ticket here. But a lot of people, I think, liking this quick ticket as well.
Yeah, this is one of my favorite things, especially when we get some fast-moving markets. I know we've got some central bank decisions. We got non-farm payrolls on Friday. Obviously, when you click that kind of disclaimer, the safety is off, and you're in
one-click mode.
You're in one-click mode. So beware of that. But when markets are moving quick, it's very fun to use. When I say fun to use, it's very efficient to use.
There you go.
You can get in and out of positions quickly, which is the whole point of the quick ticket.
Well, and especially the risk management part of this as well. You have the close all shorts or close all longs button, yes. And in the positions tab as well, you have the one-click close, which I know is a little bit different. Having been around from pre-Tastyworks, Tasty Trade platform and brokerage, it's always been click on the position that I want to close from my positions tab, click, close, and then it populates the ticket. Yep. And so these are all things that can produce efficiency and maybe even some enjoyment, but also should definitely be aware of if you're in the quick ticket or you're using the one-click close. These are all, one-click processes here. It's not necessarily a scenario of like, I'm going to click this and then I'm going to click this other thing. And it's because a lot of these Forex markets can move around very quickly. And you might say, well, Frank, I know I've been studying volatility for years. Great. Me too, friend. And of course, the Swiss franc versus the US dollar is going to be less volatile than Apple, Amazon, Tesla stock most years. But when you're talking about the leverage afforded, that's when you're talking about some real speed here. So a lot of one-click functionality, a lot of clean functionality for the platform.
Of course. Yeah, and the Swiss franc actually has been more volatile recently. It hasn't been the normal kind of boring pair that we're used to. It's now got some juice in it, I would say.
Yeah.
Some definite volatility. I mean, we've been down to almost 80, up to 84, jumping around every different day. It kind of changes.
It's always been an under the radar, and this is maybe I like it because it's like the inner hipster in me of like, everyone wants to talk euro, everyone wants to talk yen, even a little Aussie and CAD. People don't want to talk Swiss franc. But you're exactly right, and we've gotten in this mode before, as recently as I would say right here, end of summer, fall of 2024, and also back here, end of 23 and start of 24. You'll remember that was the big U.S. dollar sell-off going into the end of the year, and then huge U.S. dollar rally in the start of 24, a little bit more than a year ago. But if I zoom in and then go over to when we traded around 84, and you saw some really big moves back and forth. I mean, look at like here, this day unchanged on September 6th of last year. But you can see they traded down below 84 cents and then rallied it all the way back up. And from there, took this market back up to 85 cents within a week of that. A similar thing here on the 18th. where they try to take it down below 84 cents, unable to actually closes higher on that day. And we're seeing some similar price action here where you might say, well, Frank and Paul, the market hasn't gone anywhere. It hasn't gone from, 82 cents to 78 or 86 or anything like that. But here at this price extreme, which is right around 10-year lows in this market, you're seeing some big back and forth moves as we're kind of teetering on, like, is the carry trade unraveling for this dollar, or is this the low and this dollar is going to see another bounce like it has historically off of some of these lows? And we're still very much in that mix.
Yeah, definitely. I mean, I think every central bank, maybe not every, but most central banks are cutting interest rates right now, but the U.S. is not. I think we're not supposed to get our first cut until maybe July is from what I'm seeing on
What the heck? We'll take a look.
Let's take a look. I was looking at this morning, and I wish I just remembered off the top of my head, but yeah, I
That's
think
what the internet's for.
that is very true. I think we're July.
Yeah,
July or
we're
September, I think we're getting it.
Not expected here in June. Not expected here in July.
Yeah.
Although, I mean, this is a sneaky 23% here, so something to be aware of. September is where you get, but I mean, it's still only 70% chance of lower rates by September. And then by the end of the year here, if we go out, still about a 32% chance that there's only no or one cut. But you start to see the focus of the curve here by the end of the year around 2 cuts, which has been, excuse me, the distribution so far this year, Paul. But we haven't been getting those cuts. And we've seen this story before where it was, I think, 2 years ago, where it's like, we're going to get 6 cuts in January. And then it's like June, and it's like, we haven't gotten any yet. And so when is this going to happen? And so the time keeps passing by. And yeah, if we have an FOMC meeting here, what is it, next week or the week after, and they don't cut, which is, 99% chance here, and then we go through July and they don't cut, I mean, we only have 3 meetings left. Of course, they could always emergency cut, but it's looking very different if I bounce over to my TastyFX platform. Then Bank of Canada, they're not expected to cut in about 2 hours, but already at 275. We have an ECB, I believe they are expected to cut. They're down at 215. And it's funny, I was on the show yesterday, Paul, and this will lead us into our segment here, because it has all of this information and more, and how it affects the carry trade. But the Swiss are already down to 25 bips. I was on the show yesterday, and I was like, I think they're around like 1% or so. No, 25 bips for the Swiss.
Yeah, they've always had interesting monetary policy. I think we did a segment on the Swiss probably a couple of years ago. And they've had some interesting monetary policy over the last few years. And maybe one day we'll do a deep dive into that. But yeah.
Yeah, because it's not just like, oh, they're Japan. Like they're, really weakening, trying to weaken their currency. We just showed you Swiss franc is actually near highs for the last 10 years against the U.S. dollar. We should do a deep dive on that because they do some other interesting stuff. When they were hiking, when everybody was hiking rates, they only got up to like 3%-ish because they were using some other central bank activity to kind of calm that inflation spike. But anyways, let's get to our main segment for today, Paul. How to use swap rates in your Forex carry trading strategy. I couldn't imagine a better person to have here explaining this stuff. He's explained it to me several times, and I know so many people, new entrants into the Forex community. One of the big things, Paul, is always why, if I'm long or short this Forex pair, why did I see a little credit or debit in my account last night? Or why is your platform telling me about the swap bid and swap offer? I only know about the prices bid and offer, and that just tells me where I can buy and sell. What does this thing mean? And I figure we start with the prime example of the TastyFX platform here. How do swap rates work? Let's have you take us through it.
Sure. So very loosely, it's basically a interest rate differential between the two currencies and the currency pair that you're trading. Your swap bid is if you're going to be short overnight, and your swap ask is going to be if you're long overnight. When I say overnight, when overnight starts is that if you hold a position through 5 p.m. Eastern time, 4 p.m. Central. So that's the key. It does include our overnight admin fees in this. It's baked into the swap bid and swap ask that you see on the platform.
What is that admin fee? Because that's a sneaky thing that people might be like, oh, well, I have been to a casino or two in my time, and that VIG can be pretty heavy, makes it really hard. But what is the admin fee at TastyFX?
Yeah, it's 0.5% per annum.
Okay.
So if you take a 0.5%, I think we have it on our website somewhere where you can actually where it breaks out the math fully for you. But you basically take a 0.5% of the 4 p.m. Central mid price of the currency pair. It works out to basically like 1/10 of a pip, I think, if I do the math off the top of my head. But it's very small. Like
0.5% per year. And so, like, if I'm looking at I just want to hold this for one night, you're talking about 1/365 times that 0.5%. Or if there's an interest rate differential between the U.S. and Swiss National Bank of 4%, if you were going to hold it for a whole year, that difference would be like 3.5%. Okay, gotcha. And you can see here with some of them, like pound, I believe the U.S. has, we're at like 4.35%. We're in that 4.25% to 4.5%. And I believe the UK is solidly 4.25. And so that's one of those scenarios where it's actually long or short. It's a small overnight debit to your account. But obviously you look at the dollar yen or even euro dollar at this point, and the U.S. having higher rates is leading to positive carry in the U.S. direction for these pairs, right?
Yep, absolutely. And that's what you see across the board. And kind of how you can tell that. If you look at Euro USD kind of on our PowerPoint slide here, the swap bid, meaning you're short Euro USD, you're long dollars, you're short euros. That is where you get the positive carry. Obviously, around the flip side of things, you're going to actually pay to hold that position overnight because the dollar has a higher interest rate than the euro.
Awesome. Let's take a look at an example a little bit closer, because this is one that's been interesting to a lot of people really for the last 3 years. At this point, it's more than 3 years, because Japan's interest rates have been near zero for, I believe, more than a decade at this point, although they are now up to positive 50 basis points. They were negative for a stretch there. The U.S. still having rates north of 4% and Japan still having rates south of 1%. Still a positive carry in that U.S. dollar direction. When you're talking about, I took this yesterday, and you're talking about a little over a point of positive carry on an average day around right now. It's June 4th. This can be a little bit of an edge in the direction of where you might want to trade. It doesn't by no means guarantee profits, because as we have down here, there is significant price action risk. You can look at, this is the price action for the last few months, and just since April, you've got a high to low range of 1,000 points. And so from April until now, if you were clipping 1.5 every night for 60 days, 1.5 times 60, but you were on the wrong side of that 1,000-point move, it's not a successful strategy in that scenario there. So you definitely have to keep in mind that you are long this U.S. dollar. You have a position in the underlying market, similar to people who trade options and are like, oh, I can see that, like, selling a put in the S&P 500, I get a positive theta, and so like every day that passes, I get this indicative, this theoretical value of maybe $1 or $2. But if the S&P is down 5%, that put is going to be trading against you if you're short it. Similar type scenario here, but maybe give us a little bit of context for what carry traders are looking for now that I've painted, obviously, the price action risk with a dollar yen, because that edge that I'm talking about, it's like the fact that a market is theoretically 50-50 on both sides. So what have you seen in your experience of people maybe holding positions like this for a short amount of time, medium, long amount of time? What are carry traders trying to do?
Yeah, so real theory-wise, it works the best when the market either doesn't move, it pretty much stays range bound, or it moves in your favor. So for dollar yen's sake, if we look before this year, maybe even before not last year, so would be a good example. So where dollar yen was basically just going up. It was going from left to right. I think we went from 22 to 24. We went from about, I think, 114 to 160 almost.
Crazy move.
Yeah. So that works. I mean, so the market's working in your favor, and you're getting paid to hold it overnight. So that's like your dream scenario as a carry trader. Now, the thing to keep in mind with carry trades is that when they unwind, and we've seen the yen carry trade unwind or try to unwind a couple times, things can get pretty ugly.
Yeah.
So you have to be mindful of that. Obviously, you still have to manage your risk. It's still a position. You still have a directional trade on in the market. 100%. So it's not like you're just there to collect the overnight. But I've seen people do it in euro for a long time. Seen people do it in dollar yen for a long time. But you have to have the dynamics for it to work. It's not a foolproof strategy. There's no such thing as a free lunch for sure.
Yeah, like I say, if you've gotten long at 150 and you're taking a point every night, but then the market's against you, it's now trading 145, it's 500 points against you. And so to your point, there's a lot of people who maybe will look at it more long term and say, I think this dollar yen market is going to trade between 140 and 145, and so I'm long at, let's just split the difference, 142.5, and I'll take 250 points of risk to the downside because I'm going to hold this position for longer than a year and get my 250 points. Or, to your point, of course, we have no clue where the market is going, and it can always, if it's going in one direction, it can always get more painful. Contrarian traders might look at a market like this dollar Swiss franc and say, okay, I'm getting around a point every night in this overnight funding. U.S. rates are 4%, Swiss rates are near 0%. And the U.S. dollar, this kind of rarely happens, but it is a little bit of is it an unwind trade? It's a little bit of, obviously, the U.S. risk around trade wars type of scenario as well, where you have the U.S. dollar at historic lows and the carry trade positive in that U.S. dollar direction, which contrarians might look at as being very interesting of like, oh, I'm now long this market at the lows, I'm getting the positive carry. And to the flip side, trend followers might have looked at, that U.S. dollar yen rally a couple of years ago where it goes from 120 to 140 and be like, oh, I'm going to buy this on the rise to 145, 150, and also I have that carry in my working in my direction. Or to your point, again, I just think that this is a low volatile pair. I don't think it's going anywhere, and I'm just going to get that carry in my direction. Again, using the options analogy, Paul, Apple just fell 10%, and I'm a contrarian. I want to be long Apple, but what I'll do is I'll sell a put to get that theta in my direction. Or Tesla just ripped 20%. I want to be short Tesla. I'll sell a call to get that theta in my direction. Same thing with those trend followers. Oh, this market just ripped 20%. I'll sell a put now, positive theta, positive delta, and vice versa. Or again, I'll sell both sides of it. I don't think Apple or Tesla or any of these markets are going anywhere. Does that make sense?
Yeah, absolutely. And you can also get exotic with them. You could look at some different pairs. You want to look at some, have some real flavor. I think I'm looking at a couple of these right now. Aussie yen looks interesting. It's whatever you're kind of interested in.
Doesn't have to be dollar.
Swiss franc. Yeah, it doesn't have to be dollar. It can be some of these other pairs that have some more interesting, different interest rate differential dynamics. So, but this Swiss franc one's interesting. I mean, we're really testing lows that we haven't seen in a long time, and you're getting paid to hold that to be long.
Very interesting. Here is the interest rate landscape, and this is where we'll go out because this is really where the swap rates come from, right? And you can almost always look at those swap rates and look at the interest rates and understand. Not necessarily. I don't even understand really the calculation. You understand the calculation. I don't understand the calculation fully. But this is where you get like, oh, that's why the dollar yen carry trade is so positive in the dollar direction, or even to your point, the pound yen or Aussie Swiss franc, whatever, because it's really just these interest rate differentials.
Yeah, absolutely. And I wouldn't tell people to go home and just do the math on the interest rates we have on the slides, and then
Doesn't matter.
It doesn't matter. The TomNext rates are actually it's a tradable rate that you can trade with basically a liquidity provider, but there is a underlying TomNext market that goes on that decides what it costs to borrow a currency overnight, and that's effectively what you see in the TomNext rates on the platform.
There's math behind it. You can take a look at it. It's the same as options. Like, of course, if you want to read 3 books about the option Greeks, have at it. If you want to read about TomNext rate, it seems wild, but I'm positive there are at least 3 books on Amazon on TomNext rates that you could find. I wouldn't necessarily recommend it, but there you have it. That's the swap rates and carry trading strategy. Thanks so much, Paul, for joining us on the show here. Love to have you on Wednesdays for more of the heady Forex action. But with that, we'll send it to Tom, Tony, and Bonetta coming up next.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.